Good afternoon, everybody. This is Michael Pilligera. I am with logicalsignals.com and also tradershelpingtraders.com. And this is the Elliott wave update for the NQ for Tuesday, April 20th, 2021. First off the bat, my apologies for not getting last night's update published. And the reason is that I use Zoom to record my screen and to do the podcast. And Zoom kept crashing. And by about the fifth time, I had to give up. And so I apologize. But on one degree, I'm kind of like okay with that because the market actually revealed a whole lot more to us today. So today's update, I think, is going to be more involved in terms of what we're doing and where it should be going moving forward from here. I've made some adjustments to the account, and originally I had felt that this minor wave 3 completed here and this was minor wave 4. As it turns out, that then I had marked this as a minute wave 1 of minor wave 5, and that would have then produced a second wave correction, but that could not go beyond 13,772.75, and it did today. And so here were my choices: to mark this high at 59.5, 14,059.5 as the completion point for the whole cycle wave that we've been working on, counting. And that would have put us in not the right position, I think, because I still believe that we're just in a correction and that we've not completed this intermediate fifth wave, which is where we're in. And that's what I would have had to put there as that intermediate 5. And that then would have completed the cycle degree. I mean, let me just go out and I'll show you. It would have completed a primary wave 5, and that would have completed the cycle wave 3. Now, that would set the stage for a much deeper, much bigger correction. And cycle wave 4, that we're expecting to come all the way back down into the area of the previous fourth wave of 1 lesser degree, which is primary. This was primary wave 4. That was in March of 2020. And that took us on to 6,629, we'll call it, we'll round it up. And from where we are to expect a move down there at this stage just did not jive. Now, having said all of that, it may well be, but right now I am not feeling it, because we continue to see pretty strong buying when they want to come in and buy. We still have not gotten through Apple's earnings, Amazon's earnings, Facebook's earnings, Google's earnings. Netflix comes out tonight and they bombed. Well, I don't know if they bombed, but the stock is down from the close almost $50. So there was a little bit of disappointment there. That's going to add to the corrective nature. But we have Tesla to come out. We've got NVIDIA, I believe, needs to report still. We've got Microsoft online. We've got Intel online coming up. So there's still quite a bit. Let me just double check. I'm not making a phone. Yeah, Intel doesn't report until Thursday. And so we've got quite a bit of activity still coming in terms of earnings reports. And unless they all start to come out negatively and really start driving this market lower, I am going to just move things up and not declare this over at this level, and that we're dropping into the beginning stages of a cycle degree fourth wave. Because if that was the case, I would be expecting this to be coming off very rapidly, very forcefully. In other words, like, we're out, we're getting out, everybody's changing positions, et cetera, because there has to be something jarring to the markets, to the economy, to whatever, to really start driving total reversal of positions. So here's what I think we can go on. Now, I have put in Fibonacci retracements for this wave 4 that we're going to be looking at. Now, we would be going down to the 4th wave of 1 lesser degree, which happened to be right here, and we've already surpassed it. And that's okay. So the normal thing is that a wave 4 will kind of come in at least into that area. But now we're seeing, because of the extension that wave 3 did, I'm going to be expecting a little bit more. So basically thus far, we've only come down and touched 0.236, which is pretty much bare minimum. So if we get a rally from this point, it would be a B wave. Because I think that we pretty much have kind of worked out that either this is an entire ABC, and maybe we get one more new low, or we're still going to do a B wave and then come back down in a C wave. Now, a couple of ways to look at that. If this ends up being like an A, B, C for A, which is totally possible. In fact, that would be the best way I could count it right now, is that an A, B, C, A. Then we get a B wave, which could likely go all the way back up to those highs, and then turn around again and come back down to these lows. And then the entire 4th wave is contained in what we would call a range-bound market. Now, that is very possible. But when we start to get breaks below 13,716, that's going to drop our support for this 4th wave down to 13,504. Now, am I expecting that? Not really. But yes, it is possible. So we can't just discount it and say never going to happen. Because the minute you do that, that's when they're going to come in and get you. So again, what we do is we trade what's in front of us. We trade according to where our Fibonacci's are, and then our internal Fibonacci's during the day that are going to help us monitor movement. We're going to use our moving averages. Right now, they're lining up to all go lower. You're going to see here comes the 200-day, and the 20 is now beginning to drop down. The 50 will continue to drop down. The 8 and 4 are already below it. So if that all lines up on an hourly chart, then we've got lower prices coming. Then the charts are in alignment to go down, because we would be looking at all of that. Right now, that's not the case. So I'm looking at this. If I bring this down to, let's say, a 15-minute chart so we can see some of the eternal moves in here, this ends up being a 3-wave rally. So I believe that what we're going to see is this is a 1, this is a 2 that didn't really take that out, but you can see how high a 2 can come. And then this is wave 3, that's wave 4, and now we're in the 5th wave. So I would expect that we're going to get new lows below what we saw today. And that may happen overnight, and then we pick up and we start rallying again tomorrow. Once we do get that wave done, then I'm going to be able to run Fibonacci's. And again, what you're going to want to do is, if it is indeed going to be an ABCA, then I'm looking for pretty much a rally all the way back up. So you can draw Fibonacci's from here to here, and you're going to get where your B wave can come in. So in other words, from that high to wherever this particular section of this move bottoms and turns, then draw your Fibonacci's from that high to the low, and that's going to give you resistance zones coming up. Now, definitely you're going to look for something that's at least going to come back. I'll just do it from what we know thus far. Let's put it right there. Come on, come on, come on. This is, my computer gets so fussy. Come on. Anyway, we can kind of look. You're looking and you're seeing the 382 is up here at 13,800. And then we have 13,000 above 13,880 or 881. That's 50%. And 618 is going to be above 13,900. So we can get up there pretty quick. There we go. So we have 382 at 13,842, 13,887, 13,928, and 13,958. So we can get all the way back. In fact, 100% would be all the way back at the highs. And that is an ABC flat, what we call an ABC flat corrective. And that's where waves A and wave B are both 3 waves. And then the C wave always is going to be 5. So it would be 5 waves back down. And that is one suggestion, a possibility. We cannot discount that. It could just only get to here, could get to here, could get to here, and then turn again. So all things are on the table. Corrective moves are sometimes very difficult to trade and sometimes very difficult to gauge because they come in various forms. Now, like this looked like a very clean ABC down to here. Well, it went up and then came back down. So obviously the correction was not over. And because we would expect that to just keep going and get back above 14,000. It did not. And now we're back down below 13,800. So things are happening pretty quickly. The moves are very tradable. Trade what's in front of you, trade direction, and don't get married to a particular point. Continue to trade what's in front of you. If they continue to come in tomorrow, then they're going to dump because people are moving out of positions. Well, we have support and resistance set up. Moving averages will continue to be in play. So you start to see them breaking down, you know you're going to work on these as your moving averages. You can take this up to the daily. Now you're going to look for additional moving averages coming off. You can see them. You got a 50 here, you got the 20 up here. So move up to your next larger picture and pull your moving averages so that you have areas to where you're going to be able to define that the market is truly breaking down. And when it breaks, then you've got your next levels coming off. And that's going to be important, okay? So tomorrow, just to recap, looking for some additional downside and then for a rally. Again, put your Fibonacci's in place. These are just there to show as an example. If that low holds, and we start to rally, then we've got our points. If not, then I'll re-extend and decide to reset them at that low, which may happen overnight or during the early session tomorrow. Upside should be limited. We're not looking that it'll move to new highs, and it's going to be fits and starts on the way up. There are times when a B wave is nothing but just gangbusters and they push as hard as they can. So again, a lot of possibilities, all very tradable. Trade what's in front of you, trade with stops, and don't get married to any position. Next update, Wednesday, the 21st.